In the previous video, we talked about the appropriate position sizing, and we were looking at this candidate on Boston Scientific from this week's stock report. And we looked at the entry and exit criteria up here, and we identified the position size using the position sizing, this long position calculator. So we put that on the chart. And again, we set that, let me click on the little cogwheel there, to a 1% risk tolerance based off of a $10,000 account size. And it spit out the 131 share position size. So now, and again, you can see that down here. Now we need to execute that trade with a stop loss. And that's the purpose of this video, is to talk about how to place that stop loss. So we'll switch over to the brokerage platform here. I'll go place the trade. And I'll click on that ask price. And then I'm going to do a first triggers sequential order. This will give me the ability to put in just a stop loss. Now I could also use like a first triggers OCO and create a bracket. But for now, I'm just going to show you how to place the stop loss. So we'll do a first trigger sequential order, and I'll create the opposite order. And there's lots of different ways to go about creating these order tickets, but this is just one of them. And our entry order technique, we're going to use a stop limit. And we had suggested that we would trigger in if it would go above 42.75, and we put a limit on that at 42.85. So if the trade goes at or above 42.75, it will trigger into the trade as long as it can get filled at less than 42.85. And I'll make that order good till canceled. And I'll make both those orders good till canceled. Now, for the stop order, we're going to make that a stop market. And the reason we make it a stop market is so that it does not limit our ability to exit the trade if it trades at or below the triggered price. So we had put it in at 41.99, a little looser than the suggested number in the report. We went a little bit more conservative, and that's okay. We want to know that's kind of a minimum number. And we can do up to 131 shares. So I could place that order in for 131 shares, and that would match the risk tolerance for those numbers that I put into that calculator. Now, that may or may not match your risk tolerance, but it's important that you use proper position sizing and, of course, the stop loss, as we're doing in this video. And that's how you place that stop loss order. So I'll go ahead and send that in, and we go look at the chart here, and there you can see that little stop right there on the chart. Let me zoom in on that so you can see it. And we have the stop order so that if it goes up, it'll buy. So if it triggers up, it'll buy above that price with the stop limit. But if it then were to reverse after entering the first trade, that second order will get triggered if it goes down. Now, this second order doesn't exist until the first order gets filled. That's why we did a first trigger sequential order, so that that first order could get filled, and then the stop order would get put into an active order, status, where it would be a waiting order status. And if the price then turned around and went down instead of up, we would exit the trade because we were wrong about that price rising, and we don't want to find out how far down the price can go. Always use those stop losses. Use them religiously.